Well, good morning, everyone in Southern Oregon, and welcome to the Real Estate Show. I'm Alice Lema here with Pete Belcastro. We're both brokers at John L. Scott here in Southern Oregon, and we're so happy to welcome you to our show today. Boy, do we have a lot to talk about. We're getting ready to talk about phase two opening. Real estate is just going gangbusters, and we have one of our favorite guests, Guy Giles from Mutual of Omaha Mortgage. It's going to
Yeah.
be a great show. So let's start with Pete. How did things go in your real estate world this week?
Well, just think of where we were a week ago or 2 weeks ago. Go back a month and 2 months since we've started the lockdown. And it's just quite remarkable how activity in real estate, which has kind of been somehow, I don't want to say immune from the COVID world, but it certainly has held its own and maybe the driving force to get things back to whatever normal is going to be. So that's been a really positive thing. I have been really busy, Alice, as you know. Gosh, I've got out of state since they opened it up. A lot of out of state people are now coming in who we've been talking to on the phone. We've been Zooming with, we've been doing virtual tours. They're now coming here and we're seeing the results. They're actually buying. And so our pending sales, as we're going to find out a little later on, the pending sales are like through the roof right here, right now. And all this is going to come into kind of play in the next few months. But there's a lot going on. And mortgage rates, that's why we got Guy Giles today, Alice, because they're still, without question, the driving force, I think, in our market, because they're so affordable right now for so many people. We have one problem, and that's inventory. We'll talk about that later.
Yeah, it really is an amazing time. And, we sound like broken records the last few weeks, but if you have thought to change your address right now, this would be an amazing time because there's not very much competition. We do expect a huge surge of listings in Southern Oregon later in the summer as people, dip their toe back into the market. But right now, the backlog of buyers is bigger than ever. And it's really fun to put a listing on the market right now, especially with all of the relocators.
Well, for that very reason is that the inventory below 500,000 is where it's really the crunch, where it's been for, a long time. You go up into the luxury market and there's still a lot of choice for buyers. It's really in that 200 to 450 range, 500,000 range that is so difficult. And as you say, when you put something on as a new listing, really for the sellers, their expectations really are pretty high. It's going to go pretty quickly.
Well, and we still have to be careful about pricing because we can't put everything at $1 million. That just doesn't work. However, if you're reasonable in your pricing, I think you'll be pleasantly surprised at the amount of activity you get. And it gives you that moment in time in your life where you can make your change. And that's what this is all about.
And the one thing that hasn't changed, that sellers still think their place is worth a lot more than they actually are probably going to get from it. But
we'll talk about that.
The gap is narrowed a bit.
So we have a break coming up. We're so glad that you could join us here on the Real Estate Show. Alice Lema, Pete Belcastro, and coming up next, so please stay tuned, is Guy Giles from Mutual of Omaha Mortgage. So don't change that dial. Well, welcome back, real estate fans, to the Real Estate Show. I'm Alice Lema here with Pete Belcastro. We're both brokers at John L. Scott here in Southern Oregon, and we just love talking about real estate, and we're so happy to be with you today. We have so much going on in the market, the interest rates, the stock market. Everything is in its own evolution since the pandemic. And we're excited to check in with Guy Giles from Mutual of Omaha Mortgage. Welcome, Guy.
Hey, well, thanks. I'm just kind of sitting here waiting for the slowdown that is supposed to be happening at any time, I guess. From our end, we're actually loosening some things up. Everybody had kind of a knee-jerk reaction right after the lockdown started with some of the what we call non-QM on our side, meaning not the Fannie Mae, Freddie Mac, but kind of the bank statement loans and the ones that are for people that are self-employed that might not, show everything on their tax returns, but we do know that they make the income. So we lost that, and some of it's actually coming back right now. We've had Fannie Mae and Freddie Mac are still loaning. Really, the only changes that I've seen come up were just a little bit more documentation for self-employed people. They're going to do more of an updated, that's an audited profit and loss rather than just a regular profit and loss if you haven't filed your taxes yet. So a little bit more documentation on that, but overall, I'm not really seeing any issues on the lending side at all. It's going great.
So the people that are coming to you to get pre-qualified now, I know for a while during the pandemic, there was some concern about if they were essential services or not, and then that didn't seem to be an issue after a while. So is this kind of opened up to everybody now?
Yeah, I mean, we didn't really make the distinction on essential services because, I mean, if you weren't essential, but you were still able to work from home, as long as your hours were sufficient to be able to, to be able to qualify for the loan, you were actually okay to do it all along, even if you weren't an essential worker.
So we don't want that to stop anybody. If you're sitting at home, don't sit there and think, because you're not essential, you can't buy a house right now.
Yeah. Now, if you're out of work, you have to wait until you get a start date. So I mean, we can't actually loan with a start date. So if it's like, hey, they laid me off for a couple of weeks, but I'm going back to work, you're able to get into contract and do that as long as it's coming back. I mean, it's the guys that actually lost their job. Obviously, that wouldn't be a great time to buy one anyway. We want to make sure that you're going to be able to make your payments. But overall, lending really hasn't been impacted. Like I said, other than a couple of those programs that went away that are starting to kind of sneak their way back in right now. So it's a good time to talk about it.
Cool. Well, it's very exciting. So, Pete, you were talking earlier about how busy you are in your real estate business. What are you seeing out there as far as people's choices of properties and how their mortgages are going?
Well, I think the biggest thing is because you've got interest rates hovering around 3%, 3.2% for 30-year, right? Isn't that where
yes,
districts right now? I mean, as we go along, that's pretty low, right?
They're great. I mean, we've always said that anything under a 6% rate's a good rate, and I don't know what we're going to revise that to down the road. I don't like cliches, but it is pretty amazing where these rates are and what the difference is in the payments. All
right. So what that does for us is to give us the buyer more buying power. They can buy more house with that loan. Isn't that how that works, right?
Yeah, absolutely. There was one change that we've seen on the mortgage insurance side, and I guess I should have mentioned that earlier. They did tighten up on that a little bit. If you have lower credit scores, anytime you have less than 20% down, you have mortgage insurance, and it's either paid by the borrower just up front, paid by the lender up front, or paid monthly by the borrower or the lender. And some of those rates went up a little bit, but just pricing everybody out, they're still trying to be competitive with each other. So I shop around and look at a few different ones. So that was one thing that hurt a little bit. But as far as the rates go, yes, they're really low, and yeah, you can buy more of a house with the exact same payment. So
that's what I was doing, Alice, was that kind of thing where we had X amount of money, but the rates were so low, you could actually look at the next kind of higher level, the next level up in terms of properties. If you started at 300, you could maybe go to 350 or 400 even. So that's really kind of where the rates
for the same payment is what you're saying. You could have basically the same payment and more,
and get more house.
Yeah.
And so to me, that's what I'm seeing. But what's really, I think really across the range below 500,000 is still really, really moving. For example, what we're seeing is that there's a lot of pending sales going on. Last week, for example, there were 92 pending sales in Jackson County. So the week before there was 90, there were 89. So that has been consistent. The solds have still been around 50 a week for the last month or so. That's about 40% to 50% below where it was a year ago. But all these pending sales are all going to start coming into the market to go into solds. And that's going to go back up.
Unless they go back on the market. So that'll be interesting to see, because if buyers are in too big of a hurry when they write their offers, sometimes they get jittery and then it comes back on the market.
You mean they lose the property, you're saying?
Well, they just changed their mind. Yeah, if there's too much of a push in the early stages to write the offer and get, into contract because they're worried about low inventory, then sometimes just a week later you'll see them come back on the market just because,
Yeah.
they felt, like they made a rush decision.
Well, we don't want anybody to make a rush decision because it's a big decision. And that's what talk about educating people as buyers is you want to make sure you do it, you have your homework in. Boy, because if you do it kind of halfway through, what's going to happen is that if you've got a certain price, you've got 3 or 4 people lined up behind you who are making maybe that same offer. And if you make that offer, you get it, then you kind of disappear or you don't follow through. Then these other people have kind of filtered away, so you're not doing a service there to the seller either when you do that. So. You got to be careful. You got to pick and choose, especially with multiple offers. Heck, I went into a place with some buyers, Alice. They were in Guy. It was $245,000. I was the first day on the market. I was the 4th person in there.
Wow.
That day, and she had 2 offers on that. But by the time we even left the house, she had 2 offers. So that's the kind of thing that's going on in certain price points. But the houses have got to be pretty much moved in, ready to go. They're not going to walk in and get that kind of offers for something that's not really nice, picked up, clean, smells good, and looks good to the buyer.
Yeah, and that's more than just being financeable. Like you said, it has to be pretty nice, pretty move-in ready, and updated. And
even the updates sometimes, as long as it's clean and it's there and it smells good, because people are going to go in and do what they want with it once they buy it anyway. They may put some new paint on it, do this or whatever. But to give them that opportunity, and we're certainly seeing it in certain price ranges. My goodness.
Well, and it is a tough price range. Anything under 300 for sure. And many people don't have the cash to do those improvements, Pete, that you're talking about. So, Guy, what does a lender like? What possible ideas does a lender offer?
Well, there are a couple of loans where you can get some of the improvements done on your house. If you're going FHA, it's a 203K, and then there's, some home style programs and things through Fannie Mae where if you want to actually get some of those things done, you can absolutely. You'll get your bids and everything before you close on the loan, so we know exactly what you're dealing with, and yeah, you can get some remodeling or some improvements down in the house.
Do you get many of those, Guy? Do you get many people actually applying for those types of loans on those rehab kinds of things?
It seems to be the same people. You'll get a couple of them that are really wanting a bargain, and they'll call up about the single wide out in Williams or something. But for the most part, I mean, I always try to be very honest with everybody. I try not to engage in a lot of these rehab loans just because I want to focus on the things that I do well. I'll get a couple of phone calls. I have a couple of guys here at the bank that are really good at doing them, and I end up just kind of referring them off so that so that they're well taken care of. But yeah, they are out there and they're still available. And I mean, it just feels like it comes in spurts. When inventory is low and there's a few non-financeable houses, I'll literally get 3 or 4 phone calls myself on that exact same house.
Yeah, because what else are people gonna have to choose from? So
yeah, but there are plenty of financeable houses. I think the main thing is just to get a good real estate agent like one of you guys working for you, because you want to make that right offer, and people will say, hey, I want to get it for as little as possible, and a realtor that'll kind of stand up to them a little bit and say, we can offer $40 for this house, but if you really want a shot at it, we're going to really have to go in at this. And it's just nice working with quality agents. And I don't say that just to be nice. It's true.
Our fearless leader at John L. Scott, Jim Remley, the managing broker there, he has a famous line, and it says, sometimes full price is the right price. And when you're in a low inventory situation with multiple offers, sometimes that's what you have to do. And you need to have a good lender behind you so that if you can go a little bit more or not, or pay your own closing costs or not.
And I have a phone number of a couple of them if you guys need one. So
tell us a little bit about what you're seeing in closing costs, Guy, because it seems like the higher up you go, the more that the buyer is wanting the seller to pay the closing costs, it seems. At least in my world, do you see that? What do you guys see in that in terms of how people are how buyers and sellers are handling closing costs in the market that we're in today?
Well, buyers just seem to be, hey, if I'm going to offer a full price, I want to get, I think everybody's kind of like that. I want to get a little something out of it. I do. It is pretty common to see closing costs. It's rough when somebody has a house out there and they just reduced it by $10,000 because it's not moving. And then everybody thinks, all right, this person's panicked. And, in their mind, they just lost $10,000. Last thing they want to do is pay your closing costs and come down another 5. So, I mean, it's very common as far as that goes. You do have to watch closing costs when it comes to people like us, that'll, you want to look at that APR. And that's really the fees for the first year that are adjusted into it. So I can give you a 3% rate, but if your APR, your annual percentage rate, is 5%, then I'm charging you a lot to get that rate. So, you want them to be close to each other. And by the way, when you are comparing fees and looking at that, there's really 3 things to look at on the numbers when you're comparing lenders. And rate is one of those. And then fee is as far as what the bank fees, underwriting, processing, things like that. And then any points that you're paying for the loan. Anything beyond that, they're going to collect the same amount of reserves. It'll get reconciled at the title company, even if that online lender misquotes you and says you only need two months of reserves in there, and then they accidentally forgot to not click, to pay your insurance for the first year. But really, you if you boil it down to those 3 fees, you're in pretty good shape, and it definitely doesn't hurt to compare a little bit. I've had a few of them in here in the last few days that I get sent a good faith estimate, and I'm 0.25% to rate, and that's to bet better, and that's a lot in the long run. So anyway, just watch them for sure, and lean on your real estate agent as far as, what you can ask for and what you can't, because if it's one of those properties that's going to go really fast, everybody, like I said, everybody wants a deal, but ultimately you want to get it accepted.
Yeah, you want to get the property. And we've got more questions for Guy Giles from Mutual of Omaha Mortgage coming up, but we've got a break. Realestateshoworegon.com is our YouTube site. There's 11 years of amazing shows and content. Pete Belcastro and Joe Brett from the past, realestateshoworegon.com. So we'll be back in just a minute. Stay tuned. Alice, Pete, and Guy, don't go away. Well, welcome back, real estate fans. I'm Alice Lema here with Pete Belcastro. We're both brokers at John L. Scott here in Southern Oregon. And today we're having a very interesting chat with Guy Giles, Mutual of Omaha Mortgage. And we were just talking about how hard it is to get a property right now in that 250 to 350 range here in Southern Oregon, and discussing some different strategies with Guy. And Guy, one of the things I've noticed is in a competitive situation, we were just talking about closing costs. Sometimes you have to pay your own. And if you don't have the cash, what do you do in that situation?
Well, let's hope you do. I mean, there are ways that you can, if you don't have the money yourself. I mean, it's good if you save it yourself, because obviously the whole experience means a little bit more to you. But you can get gift funds from family members, things like that. On some of the government ones, you could do charitable organizations. But for the most part, you're kind of on your own if they're not going to pay for them. But I mean, again, it's a good thing to have a little bit of money in reserve anyway. If you're buying a house and you're really down to that last dollar where you don't have closing costs saved up or anything, what's going to happen if your air conditioner goes out? I know you guys are good enough real estate agents that people usually walk out with a home warranty, but
Yeah.
but it is always nice to have reserves for just kind of for whatever happens. But definitely talk to your lender, get the numbers up front, so so you're not super surprised when all of a sudden the payments there. At 11 o'clock at night last Sunday, I was quoting a guy, and he said, "Oh, I'm not buying the house. That's more than I thought the payment was." And literally, it was 11 o'clock on a Sunday night, and anyway,
Wow.
I'd done the math wrong. We re-looked at it while we were still on the phone. We got it straightened out, and he ended up bringing me in his documents today, and he's in contract. Just like everybody seems to be in the last week. I think that It's been 7 weeks that mortgage applications have been up in a row, and they're actually 18% higher than they were a year ago right now.
Really?
Yeah,
Wow.
Unbelievable. Wow.
It's pretty insane. You know, I've had people coming in, you know, and I try to keep them away from that, at least in our market, saying that, hey, this big crash is going to come in the market. And, you know, I mean, there's some logic to that, but I keep thinking back to, if I was in a big city during a big shutdown, I think that'd be a pretty scary place to be. I don't like big cities anyway, but it's just one of those things that I think people are going to really gravitate. They're finding out that they can work from home. So I've had a few phone calls like that. Hey, I found out I can kind of work from home, so I'm going to go ahead and make this move now. I really think that people are going to come to this area, and because we didn't have an overabundance of houses anyway, I just don't see the housing prices going down. I could be wrong, but we haven't gone through the lending like we did back in 2006, where, you know, we were loaning to a bunch of people that probably shouldn't have got home loans, where we've been doing make sense lending for a decade now. So I don't see, you know, hopefully nobody will lose their house, but I really don't see a big correction around here. Maybe everybody doesn't want to pay $6 million to live in San Francisco, but I think it's still a bargain here for $300,000-$400,000 for a lot of places in the country to come settle down. So I think that's in good shape.
The biggest issue is how much are they going to go up? I think that I agree with the guy. I don't think they're going to go down. It's how much, as we talk about, how much do we go up, and how much can our community, how much can we, you know, how much can we afford locally versus people buying locally, and those who come in from the outside to buy. And those are going to be big issues.
Well, and will it appraise too? You know, the appraisers are going to keep it reasonable.
Well, right. Yeah, that's always your safety net when it comes to a house is your appraisal. And I actually had a rare low one today. You know, it hasn't happened a lot, but every now and then it does. But again, these things go up if you're in them for a long time. My house that I owned through the crash is worth twice as much as it was before that, and I'm talking about the last one where the housing market really went down. It's a long game, and everybody needs a place to live. So if you can get in, it's a good. I think it's a really good time. Rates.
Now, how much are people putting down today on conventional loans that you're doing? I know FHA it's 3.5%, USDA, you know, and VA are 0, but conventional loans, what are most people putting down today?
You can come in with a minimum of 3% down. And that's, I mean, if we can fit you into one of the Home Ready programs or Home Possible, where the mortgage insurance, like I spoke about earlier, is subsidized a little bit and the rates are just a tiny bit lower, that's a really good one. But it's more for, you know, low to moderate income. And believe it or not, that's like $55,000 a year. I remember when I would have dreamed to just make that. But there are 3% loans, conventional, you know, just with regular mortgage insurance. So I'm seeing 3 to 5. I mean, sometimes 50% down. I mean, it's real. There's really no trend right now like there was back when USDA was really popular. Everybody was doing one of those. I'm not seeing a ton of FHAs right now at all. That did get weird when this pandemic started. Without getting too deep into the weeds on it, lenders had to make the payments to Fannie Mae and Freddie Mac whether or not the borrower does on those programs. So when the forbearance and all that happened, there was a big worry about, you know, the banks having enough liquidity to loan, because again, they still would have to make the payments. That's actually eased up quite a bit. And the FHA loans and the VAs, I'm quoting some pretty amazing rates on those again. And they were pretty bad for a few weeks there.
Does anybody put 20% down anymore?
Well, like I said, the last one that I did was 49% down. So, I mean, it is really all over the map.
Oh.
There's a lot of people that have 20% down. This lender paid mortgage insurance, or borrower paid, that's just a one-time fee up front, sometimes can reduce your mortgage insurance down from, you know, $160 to $40 a month. And I'm making that number up, but it's pretty close to that, because you're just paying that one-time fee, and it is financed in for the life of the loan. So I do I do the math with people to see if that makes sense. But a lot of times, if payment is really the most important thing to you, it's a really good option to look at just that one-time upfront mortgage insurance.
Yeah. Okay.
Guy, are there any people that are coming in and because of the pandemic, nervous about buying something at their full approval price? Do you have anybody coming in and saying, I want to buy under, I want to buy less than?
No, that's usually, well, yeah. Actually, a lot of the younger kids right now, I mean, I say kids in their early mid-20s, seem to be very cognizant of what that payment's going to be. And I don't see, like I did when back in 06 and 07, where people are very often, and they still do it, but what's the very most I can get approved for? That just, I think people have learned, or they've watched their parents go through something, and they're just, they don't want to be at the top of their budget anymore. And then of course I have people, wanting to refinance their truck to be able to qualify, but so a little bit of everything, but yeah, I just don't see people right at the top. I try to keep them from that also with taxes the way they are around here. There's just such a wide margin of where, how much you're going to pay for taxes. I don't ever let somebody walk out of here and say, this is your payment at a $300,000 purchase. I mean, it is very specific to every house, every program, just a lot of things.
You're
Well,
right.
the taxes in Jackson County are high. Sorry, Pete, go ahead.
I was going to say, you're right about the disparity in property taxes. When you're showing houses, you always look at what the property tax is. I mean, it varies whether or not the county has ever gone out and reassessed a lot of these places. They've rebuilt them or whatever. And you see a total amazing range of property taxes out there, Guy, and you're right. Some are high and some are low. It's quite remarkable. I just wanted to say one thing about closing costs before we get out of there. There is some assistance available through the Rogue Valley Association of Realtors and their program through Access. I have a young couple that is actually going through that, trying to get some additional. We got the seller to pay the closing costs for us at a full price offer, but we're having to come up with them the 3.5% for an FHA loan, and they're working on that, trying to get that. So RVAR has a program there, and we've seen people get up to $5,000 to $7,000 in assistance through a closing cost and down payment assistance if they go through that program. So sometimes don't shut that out and think that it doesn't work, because if you stick with it, it can help you if you need it in certain situations.
Yeah, those things are really good. I think the one thing to learn from that would be to get in now, even if you're not going to buy for another month or two. When you're trying to get into contract, isn't the time to try to get approved for thode programs. I'd get in now, meet with them, because you'll have to go through a couple classes, couple first-time home buyer things, and get all that in line before you're ready to go.
And it takes a while. You're right. So we had to extend closing just to accommodate that. You're absolutely right. Yep.
Well, and there's a lot of competition for those grant programs, we call them, those first-time home buyer grants. And not all real estate agents cooperate with that. That's the other thing. And not all lenders cooperate with that. So if you are in the position to use one of those programs, make sure you get the right team around you. So the one I did was $11,000. They got $11,000. They were a disabled veteran from Afghanistan and his wife and 2 young children. And they were renting for $900 a month. And they were able to buy something very small and very modest, but it was financeable, and it wasn't really quite big enough for them, but they got their foot in the door, right? Like Guy always says, that house he bought when?
Oh, it was 98 when I got, well, before that, it was the single wide that I bought out on property on Butte Falls
Right,
Highway.
You just got to get your toe in the water.
Yeah.
You just got to start somewhere.
Yeah.
So.
And what do we say? It's how you generate and create wealth for yourself. Is to get the first one. That's what we're trying to do with this couple that I was telling you about. That they've been renting, and now it's time to create some wealth and to get into the house. And how do we get into it? And you can do it. We never give up, right?
I watched my parents pay $118,000 in rent when I was growing up. You had one house that the guy probably couldn't have paid more than $40,000 for.
Wow. So that's how tenants need to look at it. They need to add it up over time. And right now it's so easy to buy a house. I mean, even some of the appraisals are getting waived. Some of the people that are in contract are not even getting appraisals.
I'm getting tons of appraisal waivers. I can't even believe it.
Now, why is that? Okay, now why is that? I mean,
well,
come on. I mean, that doesn't make any sense. Why would they get? Why would you waive an appraisal if you're buying?
Why would the lender waive it? It's not like the buyer can waive it. The lender does.
Well, why is the lender? Okay, why is the lender waiving them?
Yeah.
Usually there's been an appraisal in the last couple of years. So if we always check Fannie Mae and Freddie Mac on every loan that we do to see if we get an appraisal waiver, because a lot of times you won't get an appraisal waiver if you're doing a Fannie Mae loan. And just to go back a little bit, Fannie Mae and Freddie Mac are the big government sponsored entities that own most of the loans out there. And if one was done through Freddie and not Fannie, you may not get an appraisal waiver. But if Freddie has a recent appraisal on it, I mean, it's amazing. I've had, I think, 5% down. We still had appraisal waivers on.
Wow.
Refinances.
Wow.
I mean, it's pretty crazy as far as that goes. I mean, if you want to get an appraisal, it's not a bad thing at all. But again, that's why you just want a really good real estate agent that
Wow.
you know that they're comping out that house that you're buying too.
Yeah, no, that's true. Interesting. Well, that saves the buyer some money.
Yeah.
And it keeps the deal together too. So I'm just curious, like, is there a way for a seller who has their house listed? Is there a question the listing agent can ask the buyer's agent if their buyer qualifies? Like, I don't even know how would you ask that?
It's not really the borrower qualifying. You actually, it's funny. You triggered something in my mind when you started asking that question about wonder if there is a way that you could run the house to see if it would get an appraisal waiver. And to be honest, I mean, I know it's a little bit backwards from your question, but I actually thought of that right as you were saying it, because that would be a nice thing. Like when people would say, hey, my house, back when the census tracts were part of the Home Ready program, you could put in your listing, hey, this one's home ready or home possible available. I don't know that. I mean, because part of it's going to be the credit risk of the borrower also. But I think that you know what, I'll have an answer for that next time we come back, again, for a question you didn't even ask. But that actually might be a pretty cool thing if you could find out if a house, at a certain price point might get one. I mean, we don't really know the answer until we run our computer simulations on Desktop Underwriter for Fannie Mae. Anyway,
but maybe, just to kind of get the word out, both the buyer's agents and the seller's agents could start talking about that topic early on.
Yeah.
I mean,
we've got a break coming up too, so hang on to that thought.
And we'll be right back with Pete, Alice, and Guy here at the radio show. So don't touch that dial. Are we really at the end already? God, this goes by so fast.
So you went a minute and a half over there, so you might want to cut this one back a little bit.
Yeah, cut that end out. But dude, I'm serious. Halfway through your question, I was like, what if you could find out if there was, I don't know if that's even possible, but I'll find out about that. Normally you need the buyer in there and the property address in there, and you can't run it without that, and that triggers RESPA. So I don't know if there'd be any way to do that, but you're probably like, I didn't even care about that, and that's not what I asked.
It was more like, I don't know what he just said, but if it's important, he'll tell me later.
Oh my gosh. No,
okay.
What I'm wondering is if there's some way you could find out if a house is eligible for an appraisal waiver, and then you could say this one, has a good chance that they won't need an appraisal. But then again,
well, we're not on air right now. So
no, and I'm just thinking out loud, so I'll shut up. So what's the last segment? What do we have left? 40 seconds?
So Pete, do you want to do 8 minutes or 7:30? What do you think?
I can do 8. Let's do 8.
Okay. And do you want any specifically directed time to you?
No, you guys are doing fine.
Okay.
Fine.
Huh?
You're fine.
Okay.
Yeah.
Okay. So this is segment 4. It's going to be 8 minutes and 0 seconds, and it's starting in 3, 2, 1. Well, welcome back to the Real Estate Show, folks. I'm Alice Lema here with my cohort, Pete Belcastro. We're hosting the Real Estate Show here. We're here every week at KCMX News Radio, News Radio 880 on the AM dial. Also simulcast on FM 95.5. And you can also check out our older shows at realestateshoworegon.com. Lots of really cool information here. And today we're here talking to Mutual of Omaha mortgage lender Guy Giles. Welcome back, Guy.
Hey, thanks. I was actually listening a little bit last weekend, and that's one thing that we probably remind everybody. They can go back and look up different topics. There was a lot of really good stuff on. Was that septics last weekend, right?
Yes, it was.
You and septics. We learned a lot about that. Man, I'm
bunch.
telling you, septics, and we could have talked for that for a long time, because septics are really, really something that can make or break a deal. And I can't believe, and I'm probably guilty of this myself. I've got a septic. You do too, I think, Guy. You're at your place, right?
I don't have my house, but out at the river one I do. Yeah.
Okay. Well, I've got one. Now over at the farm, it's like they're out of sight, out of mind until you need them. And just make sure that you take care of them and have them checked, because boy, especially when you go to sell them, because there's going to be an inspection on it, and if it doesn't work, it could cost you a lot of money.
Yeah. Closing costs would seem like a really cheap thing at that point. Instead. So
yeah. Well,
so that brings up. Go ahead.
I was going to say, I don't know what happened last week in Josephine County, for example, but they had 57. This is last week. 57 pending sales. They're usually in the 20s, 15,
wow,
20, 25, 57 last week. Jackson County had 98 last week, and Klamath County had 20. So that just shows you that how fast it's moving. The inventory is disappearing because it's not being replaced by that number. Although, Alice, this week there was quite a few on the John L. Scott in our office. But then when I looked at it again, there was like 16 new listings, and 8 of them had already been pending.
Well, and it's hard to tell if some of it is just the season, because this is when a lot of people move, or if this is post-pandemic rush. People pent up desire. They spent so much time in their house, now they don't like their house.
Yeah.
We have a lot of that.
Also, normally this time of the year, school would be letting out. Graduations would be done. SOU would be moving. You'd have a lot of movement going on around just in that particular, part of the market, but it's not there. So
that could actually take away. I thought about that the other day. That could actually take away some of the ups and downs as far as when summer happens and spring, everybody's going crazy, and then
it'd be
by the
more
time
consistent.
Just because you may not even have a bunch of people putting their kids back in school at this point. Maybe they do homeschool. People are working from all over. So, I mean, there's not a lot of the constraints, I don't think, on timing around the year. So it could even out a little bit to where this thing just lasts right in through the winter.
And there's not very many tourists here. I mean, I was down at the John L. Scott office in Ashland, I think on Thursday. I'm driving downtown and there's nobody there. I mean, there's literally nobody on the streets. Those
the bakeries open.
Lots that are full this time of year, you couldn't park, empty.
That's sad. The bakery is open. I love that place down on the end on the right-hand side. There's my secret for everybody.
Well, and I think part of the reason we had so many sales during the pandemic, and we did not expect that, was because the kids were home. And so all of a sudden there wasn't that, like Guy just said, that almost artificial deadline, or real deadline, I guess it's not artificial, of waiting until school's out before you do your move. You can kind of move anytime you want now.
And especially if your job will let you just work from home. I've seen that a lot lately, where people are just coming here because they said, we found out we could work from home.
Yeah,
that's
absolutely true. And when you get into rural properties, you really got a problem because they have to have internet access. Sometimes there's not cell service in certain rural properties when you go up some of these valleys. And so that all of a sudden that comes into play with buyers, because they have to have good access if they're going to work from home, just like you said.
So that'll be interesting. I wonder if there'll be some new technological developments that help with that.
Maybe like Zoom or something.
Yeah. So what happens if you're on a satellite and you're out in the country and you're on Zoom? I haven't tried that yet. Has anybody tried that?
That's a pretty complicated one. That's a complicated one there.
Yeah. So, and that's the problem with rural properties, is you're not going to have cell service sometimes, and you're not going to have hardwired internet. You're going to have satellite internet, but the satellite internet's actually way better than it used to be.
Yeah, and we go further out into the valleys that we go.
Mhm.
People experience that, and so working from home is going to change that a little bit for people who want. I mean, the biggest thing to me right now is people want some acreage. You know, right now rural properties are really popular. It used to be, remember, we were out running around for cannabis, they were running around looking for hemp, and now we're just running around looking for people to escape from, and they're looking at rural properties in mass right now. And you know, it's there's not very many out there.
Well, it's like I said, people want to be in their own house now all together, and they don't have to go to the big city for a job. A lot of
Yeah.
them can live anywhere they want. So it'll be interesting to see how demographically Southern Oregon changes if we become a hot spot, a place to land, because our weather is similar to Northern California, and we're in between Seattle and LA. I mean, it could very easily, we could be the next it girl as far as real estate goes.
Lord, I hope you're wrong. I truly do. Because we're going to be overrun. If what you say is true, what people say, we're going to be overrun. We have less housing right now. The prices are what our local people then are going to be the ones that are going to get screwed in the whole thing, because they're not going to be able to buy if what you say comes to fruition. So we got to have a balance there. And
well, and maybe we need to educate our locals. Like if you're local and you have a wage earning job here, maybe we better step it up so that you get something now.
Well, and that's true, because they are coming in the market, supply and demand. You really can't stop it. But boy, we need to be really careful, because we could price local people out like they have in the cities. We could have lots of problems as a result of it. So it's really a good balancing act, and we'll see what happens with it.
Well,
But
and it's
right
happened
now,
before in Southern Oregon. It
I know,
it
but
goes through.
now,
Yeah.
Guy's the guy. I mean, Guy's the one you got to go to for a loan, because you can't get anything started until you have that loan, if that's what you need. And right now, it truly is a great time to buy. As much as you say that, and people hear it,
And a great time to
really
sell.
is.
Anybody out there
It's
listening,
a
if you're
great
thinking
time
of,
to sell.
yeah,
Especially to sell.
call somebody.
Yeah.
Yeah, I heard someone has a 3D camera here, so
Yeah, I do.
I know.
I'm the
And-
tech head in the group. So,
No.
well, that about wraps it up for another great show here on the Real Estate Show. Again, you can check out our website, realestateshoworegon.com. Have a beautiful weekend. Thank you, Pete Belcastro. Thank you, Guy Giles. We'll see you back here next week, folks. And also, there'll be a repeat of this tomorrow on Sunday at 6 p.m. Make it a great day.